Today, we'll be covering 3 key charts in reference to the upcoming tariff announcements this afternoon. We'll be discussing gold, the NASDAQ, and the dollar index. And in today's video, I'll be giving you a technical and fundamental breakdown for each. Let's jump in. All right, guys, welcome back to the channel. As we get started, if you do like my content, make sure to hit the thumbs up button, subscribe if you're new. Let's start with gold. The gold market has been on a tear to the upside, and this actually makes quite a bit of sense if you think about it, because all of this tariff news produces the big uncertainty word. People are really uncertain about what's going to happen next. And the big thing here with the tariffs is that the tariffs are not necessarily just, the US versus a couple key notable countries. Now, of course, we've heard a lot about Canada and Mexico and China, but these are sweeping tariffs that people are worried about across the entire globe, right? Many countries are in the target of the United States reciprocal tariff stuff that we're hearing about this afternoon. So for traders who focus on gold, what does all of this mean to you? Why should you care about what's going to happen this afternoon? And what kind of trade setups could we potentially look for when it comes to the price of gold? Guys, we're trading on gold at $3,128 an ounce. That is a phenomenal upside move. And it's been a couple years now since the gold market rally started, a couple years back in 2023. You can see since then, we've just had a pretty much straight shot to the upside, and a very impressive one at that. But I want to talk a little bit about how traders can potentially take advantage of this volatility in gold. So specifically, we know we're overbought here, but I want to tell you a common trap that many traders do with the concept of overbought. I've just added a very simple RSI, or relative strength index, to the chart right now with nothing special. We're just using an upper and lower limit, and I just want to show you something very interesting. Many technical traders may be baffled by the rally in gold right now because it just keeps going. In fact, check this out. In the past few years, almost every single time that the market has produced an overbought reading according to the RSI, it's actually signaled a better buying opportunity than a selling opportunity. Just think about how interesting of a story that is telling you about the price of gold. Every time we've produced an overbought reading, the price goes up. So let's quickly go through some of the main catalysts for why gold continues to go up. Number 1, central banks are buying the stuff aggressively for fear of de-dollarization. Institutional money is continuing to buy gold aggressively. You can actually see when we navigate to the COT data history tab on the Edge Finder that we have had a persistent and consistent accumulation of long positions by institutional positioning according to the COT data history. Now again, this is really important because big money has stayed long during this whole rally. The third reason is uncertainty around what's happening in the world, right? Whether it be Russia and Ukraine or the tariffs that are coming into place, there's many reasons that there's a lot of uncertainty about where things are going. And the fourth reason is concern about global recession. We've had a really good streak in terms of bounce back from COVID pandemic, but now people are wondering, is that coming to a stalling point, and could tariffs be the tipping point that send us into a recession? And as many of you guys probably know, recession is typically a positive thing for gold overall. Take a look at gold in 2008 and you'll see that that pretty much led to a massive bull run for gold prices. So how do we trade this, right? So we know uncertainty is high, but we don't want to chase. So again, I showed you that RSI readings that are actually overbought have historically been pretty bullish readings for gold, but I still don't necessarily think that's how I want to enter potential price pullbacks in the price of gold. If I go from this swing low, the February 28th low, and pull back, you can actually see we get some interesting levels on this chart that look a little bit more attractive. The 38.2% retracement zone would be something I'd be more interested in and potentially looking for long side continuations. The story that I'm hoping you're seeing with gold is that many people fall into the trap of trying to call the top of a gold market rally, which can go on for much longer than people think. So I'm watching for a 38.2% retracement in the price of gold for possible opportunities to get long myself. And I mentioned the Edge Finder a second ago to track institutional money flow and so much more data. Don't miss the opportunity right now that we're offering our biggest sale of the year. It is currently 40% off to get access to the Edge Finder with the promo code that you see on the screen. And if you have any questions, use the first link in the description down below to speak directly to our support team about the current sale that we're offering. They can answer questions about how the tool functions and so much more. If you have any needs about payment plans or information about it, feel free to chat with us. Again, that's the first link in the description below. So the big picture here is I'm bullish on gold, but have got to wait for a proper pullback before getting involved on the long side. Now, let's say this level comes down into play and we get set up with this long idea. And let's just say that I do go for this trade. I put a stop loss below structure and I'm looking for new highs. And let's just say that tariff news comes out and it's actually way less scary than people were fearing. And we come down to this level and I look for this trade and it looks good and it just flops, right? We never know with the headlines being so aggressive, something could change and gold could drop like a rock. I mean, it is kind of a rock. So my point is, if that happens, what do? Do I freak out and panic and blow my account? No, because I'll risk a small amount on this trade. And if it doesn't work out, there's actually a level that I like even more, which is a pullback to this previous level, which lines up beautifully with the 61.8% retracement level. So this would probably be attempt number 2 for me on gold. And you can see that the risk to reward on this one actually gets even better. So I like the idea that if we see a pullback in the price of gold, let's just say that we get, a little bit of the tariff drama behind us and gold prices come down. Maybe that trade works great and I can actually trade the continuation, but let's just say it doesn't. My second attempt would probably be a pullback down into the 29.50 level where I'd be looking for some continuation plays on this gold overall bounce. In fact, let me just adjust my line here. I'm going to switch this to a thinner line. I do think it's important when we're mapping out trade ideas that we do consider what we're going to do if we're wrong, right? You'll see I've got a stop loss on this idea, and if it doesn't hold support, I need to get out. And let's just say I'm completely wrong and gold actually completely flips bearish. What happens then? Well, then I take a loss here, I take a loss here, and I walk away and I look for new opportunities and I just move on, accepting that sometimes you're just wrong. And so I think that's an important distinction to make for traders out there, because many traders fall into the trap of over leveraging, believing they know for certain what's going to happen next, when we never truly do. All we can do as traders is 2 key things. We can make educated guesses and we can manage risk properly. Now let's take a look at the NASDAQ, which has had a really sharp fall here recently, and there's a lot I want to talk about with this. But before we talk about the NASDAQ, let's talk about a CFD brokerage that allows traders outside of the United States to trade directly on things like NAS 100, US 30, S&P 500, and much more. Today's video is sponsored by Vantage Markets. If you haven't heard about Vantage before, they offer traders a great welcome bonus. They're a regulated brokerage, and they offer pretty much everything in a singular brokerage. What I mean by that is you can trade CFDs on indices, you can trade gold, you can trade Forex, you can trade even individual stock CFDs. They have a little bit of everything. So if you're looking for a brokerage that has everything in one place and a generous welcome bonus to go with it, check out Vantage in the description of this video. And don't miss the opportunity to get a nice welcome bonus with your sign up using the link in the description below. So first, let's do a little bit of a technical breakdown of what's been going on with the NASDAQ. It's pretty clear that we've recently found a little bit of support around this 19,200 level. We actually faked out to the downside and then have been pushing up. The question today, with the tariff news coming, is what could this mean for price action to go next? And I actually think it's a pretty clear breakout one way or the other potential event. What I mean by that is we have key resistance right here about 20,300 and we have key support around 19,200. On a weekly chart basis, the NASDAQ is in an overall bull market. In fact, a bear market is technically triggered anytime you go beyond a 20% sell-off. And so we're not in a bear market at this time. Have we had a correction? Yes. Has it been a pretty sharp correction? Also, yes. But again, you can actually see that the last time we had a move like this, it actually ended up being a very solid buying opportunity. So I want to talk a little bit about that in terms of the daily chart now. Is this the sign of a true bear market starting? Well, it could be. If you get sweeping tariffs that really scare the market and it's like, okay, now we're just going to completely rewrite global trade and we don't know where that takes us, this could lead to further selling in the NASDAQ. However, if you get some concessions, some resolutions, and some less than terrible expectations are realized in the market, you could actually see some really key breakouts to the upside. So what I'm saying here, and you might recognize this, you might say, well, Nick, you basically are saying it could go either ways. And that is correct. But I want to look for some technicals to give us a little bit more confirmation of what the next move may actually be. So let's talk about the bear case. Let's say we take out those previous lows and, there is a bit of a wrecking ball event that happens today during the tariff news. If that happens, you very well may see the short side continuation take place. And I would actually say that if you get a break and close underneath these lows, right, I'd be very cautious and actually think likely the trend is lower in the short run. However, what about if we get some better than expected news from Trump and we actually see some good resolutions to the kind of tariff uncertainties and we get a solid breakout above these key levels of resistance? If that happens, any pullback, I am a buyer, because again, what took this market down is tariffs. What can take this market back up is tariff progress news. So I'm looking for both of these scenarios. I personally won't be trading the short side if that does take place, because I personally find it very hard with my trading strategy to short and trail stop losses on the NASDAQ. It moves typically very sharply lower and then has very sharp moves, very sharply lower. Or when it's trending up, it actually fits my style a lot more because you get these kind of nice overall upward trends where I can trail a stop pretty nicely. So I'll be looking for this scenario, and this would probably be a scenario where I actually start to look for trades around this area. So I'm looking for the bullish side, but if we get a bearish side, I'm just going to stay out of the way of the NASDAQ. So looking for bullish setups upon a breakout of this key level of resistance. The put to call ratio continues to show that the average investor out there or trader out there is very scared about what's happening in this market. People are really nervous about tariffs, and rightfully so. There is some uncertainty, and anytime there's uncertainty, the market typically kind of sells off first and then asks questions later. And that's kind of what we're seeing in the put to call ratio. Now, even if you're not an options trader, what this tells you when the chart is really high is basically that people are buying puts aggressively. And when people are buying puts aggressively, it means they're really uncertain. If there's any good news, I think this market is poised for a very sharp rip higher. That's my personal opinion, my personal viewpoint on this. If you get any good news, or I'm more so not good news necessarily with tariffs, but less than terrible news would be enough for the market, I think, to actually rally, especially when you see sentiment so extremely polarized to one side of the move. We can also see this in the AAII Investor Sentiment Survey, showing that investors overall are feeling very bearish on this market. So any sign of less than terrible news, and I think the market has a lot of upside. On a positive note, this morning we had the ADP jobs numbers, which came out better than expected. And this was actually a great welcome news piece this morning. That's better than expected jobs data. We'll take that any day of the week. Again, this market is a little bit concerned about potential recessions and whether or not tariffs could send us into that. But this jobs data quietly came into place here this morning, and it was actually positive. We'll also take a look this coming Friday for the latest NFP report, which will be very important to markets to see how the state of the U.S. jobs market is looking. Again, if things continue to hold up okay, that could be a positive catalyst for markets. But if it really weakens, that would conclude maybe the tariff stuff is going to cause some serious slowdown and probably would send the market into a spiral. The last chart we'll be taking a look at is the dollar index. The dollar index has been persistently putting in lower highs in this market. And the question is this yet another one? I mean, we barely saw a pullback in the dollar before sellers already are starting to come back into this market. I think that from a technical basis, with the tariff news here that could move the market substantially today, you want to see a break one way or the other. Again, kind of defaulting back to what we discussed with the NASDAQ idea, looking for either a break below or a break above to give some confirmation as to whether we are going higher or lower from here with the dollar. Again, I really do think it is kind of a pretty binary event. If Trump comes out swinging, it is likely to cause more uncertainty and economic growth concerns for the U.S. and for other places. But again, the U.S., there's a dynamic here that's really interesting that I do want to discuss, which is, these other currencies. We take a look at like dollar CAD, for example. You can see dollar CAD has been pretty choppy. The Canadian dollar holding up decently around this. If you do get stuff that is actually positive for tariff development, what we could actually see is the dollar continue to kind of trade down slightly and give the CAD some strength. This is largely because the Canadian economy is actually very dependent on the US for their exports. The US economy is also dependent on Canada, however, for much of its oil imports. And just a reminder, if you haven't already, make sure sure to check out Vantage, our video sponsor here today. Up next, we're going to be taking a look at a clip from the live stream today where I had a conversation with Kinzo about the put to call ratio, what that really means, and diving in a little bit more into the data of how that could potentially impact today's market. Yeah, it's been, well, price action definitely has been rough the last few days. You can see, we had this big sell-off, pulled back into this area, found resistance here, and have continued to push lower. My question, though, is, how much of this fear is already in the markets? And I guess, what is the market positioned for? And what I think it's positioned for is it's positioned for the worst case scenario. What I mean by that is like sweeping tariffs and Trump's going to make a stand, and the market seems to be predicting that Trump is going to come out and he's going to swing the bat in all directions. That's what the market seems to be. So as you mentioned, if there is some softness that comes in, some considerations, some exemptions, some negotiations, some delays on tariffs, if the market sees that from Trump, I think there is a I should clarify, if the market sees any of that, even a little bit of that, I think that would be a bottoming potential for the market. But right now, as you mentioned, we're on a slippery slope, and the default seems to be sell now, ask questions later, at least until we get some more clarification around the tariffs.
Exactly. I think everyone at the moment is just thinking about bearish without any deeper understanding, because it's like, if you check the news, there is always breaking news. Trump is going to speak 25% tariffs, so that by itself, it creates this panic, even though there is nothing much to support that. So that's why we say maybe Trump might use a softer tone. I think that might change, because I think he already sees that it's not really good for the markets. And he might change. He might say, okay, we'll delay this and that, or we will have a deal with this country or this, whatever. And I think that might be a good thing. And it might happen. I think they are leaning to that direction, because this is not the first tariff. If you checked the previous one, they were all postponed for later date, or to do some investigation on that. I think even this one might be something like that. So yeah, I think we will see. We will just see. But if maybe it goes on that for a week or two, maybe we might see a slower sell-off. But still, even though we see the sell-off, is still not really reflecting what we can see from the companies, because most of the companies were doing perfect. So I don't really see the reason behind that, why we see the sell-offs and stuff like that, especially on the indices.
Yeah, no, it's again, it's kind of detecting too. You mentioned like the previous tariffs that have been imposed. There's been with each one some degree of like, for the most part, some degree of considerations and some exemptions and negotiation. So yeah, I mean, it also matters whether or not Trump is okay with, this is what I was talking about just before you joined the stream, is he okay with letting the market continuing to move lower, or is this getting his attention? That's the big question too. People are trying to figure out, is this enough of a sell-off to actually get the administration's attention, or is their pain threshold more? Could we see 5,200 on the SPX before concessions are considered, or some negotiations are made a little bit looser? That's I guess the big question, and why there's so much uncertainty out there is that people don't know, of course, how Trump's tone is going to be. That's why I think this afternoon the market has priced in such a big movement. We can see that in the VIX, for example. The VIX has spiked up here once again, showing that, again, market participants are pricing a big move in the markets, that they think that there's going to be a lot of volatility on most charts. So we'll see how that plays out. The other one I want to just show you too, we always like to incorporate some data into our discussion. The put to call ratio continues to be very elevated. This is just showing you that people have a huge demand for puts right now. They're buying bearish bets or puts on the market at a very aggressive rate. And the reason I bring that up is that typically, not always, but typically, when everybody rushes to buy puts get very expensive. And what happens most of the time is that there is some sort of reset or bounce off of that. It's actually, most of the time, puts and options actually expire worthless. Basically, they're priced higher than the actual moves that occur in the market. So right now, the market is forecasting a very big move. We'll see if we get a very big move. That's the question. I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.